video, we are going to go through how to analyze the market and take a trade. Now, when you look at this price action over here, we can see price was moving in a bullish manner. Then we had a big impulse to the downside. Then we had some form of consolidation over here. Then another form of an impulse that broke this low. Then there is another consolidation. One thing we have to understand about the market is irrespective of the type of trader you are, being it position trader, swing trader, day trader, and up to maybe day trader. For scalping, you might not need this. You have to know the higher time frame narrative. The higher time frame narrative. What I mean is that you have to know what is happening in the higher time frame. The higher time frame can be the weekly time frame, the daily time frame, or the 4-hour time frame, depending on the nature of price. Assuming you come to daily time frame and you see a clear picture, there is no need for you to go to the weekly time frame. Or when you are in a 4-hour time frame, definitely at least you have to use the daily time frame, at least a minimum. So if you want to go above, you can use the daily time frame. For GBP USD, when you use the daily time frame, price is clearer. So when you look at the movement of price, we can see that price was moving in this form. Then we had an impulse. Then price consolidated. Then there was an impulse. Then there was another consolidation. So let's bring our diagrams and a whole lot of symbols on board, drawings on board. All right. Now, when you look at this kind piece of price action here, it is corrective in nature. So we can classify it as an ascending pattern. That's why it is called an ascending channel. When you come here, the corrective pattern is horizontal in nature. So it is called the horizontal channel. Then you come to this point, the corrective pattern is also horizontal in nature. It is called a horizontal pattern. Now, when you come to this drawing we have here, the corrective pattern is descending in nature. So it is called a descending channel. Now, the function of an ascending channel is that price, which is moving upwards, is losing momentum. So there is a higher probability that the next impulsive phase will be to the opposite side. That's the meaning. Price is moving correctively here, so there is a higher probability that the next impulsive phase will be to the other side. That's why we had this impulsive phase. Now, if we have a descending channel, it means the downtrend momentum is gradually decreasing. So there is a higher probability that price will break to the upside. That's what happened over here. And the trend changed to bullish. So when you have an ascending channel, it means there is a higher probability that the next impulsive phase is going to be the opposite side, which is bearish. Likewise, if we have a descending channel, it means there is a high probability that the next impulsive phase will be the opposite side, in this case, which is bullish. So whenever there is an impulse, there has to be a correction to correct the impulsive phase. So here we had a bearish impulse, then we had a correction here to correct that. Then the next impulse followed. Then we also have this impulse over here. One thing we can see that the correction are being labeled with greens and the impulses are being labeled with red. Obviously, looking at the size of the rectangles, we can say that the corrective phases last longer than the impulsive phases. And if you want to find out the place where you can earn more cash or get more pips, it's obviously the impulsive phase. So as a trader, you have to find out the type of correction prices are printing so that you prepare yourself for the next impulsive phase. So assuming you were able to prepare for this impulsive phase, a trader would have got about 7,300 pips, depending on where the position will be placed. Likewise, assuming this trade was caught, it will be the number of pips traveled was about 5,500. So such a huge amount of pips over there. So the work of a trader is to identify the impulsive phases and the corrective phases and prepare to trade the impulsive phases, because that's where most of the money is made. Of course, you can make money in the corrective phases, but the easiest and the simplest will be catching the impulses. To continue, as we are saying, ascending channel ensures that price is losing momentum, so there is going to be the next impulse. Now, whenever a price moves impulsively, there has to be a correction, as we have already said. So this is what we have here. So whenever you sit on the chart, unless you know the higher time frame narrative already, you have to find what price is doing so that you wouldn't be trading against the trend. Assuming we are selling, we are in an impulsive phase selling, and you are here buying, always you'll be losing money. So you have to follow the trend accordingly in order not to lose money. Of course, you're a trader. You are not an analyst just to analyze the market. No, you want to find impulses and trade so that you can get money. So always try to find what the higher time frame narrative is saying about price. Let's go to the lower time frame, maybe the daily, and find out what price is doing currently. Okay, so looking at this, we can see that, let me get rid of this. We can see that price is in a downtrend. Price is selling. So as a trader, if you want to earn cash or catch impulses, you have to be selling more than buying. Of course, you can make money by buying, but you have to have the skill to do that. But to sell, you can do it easily here. So looking at this daily, you don't think we have anything. We can mark this as our swing low because price is heading towards that level. So when price gets to this level, we have to wait and see whether price will be able to break the level so that the next impulse will continue as something like price will break, then probably correct, then the next impulse will continue as this, or price may get to this level and reverse upwards here before coming back. So first touch, second touch, there may be a third touch before price comes back to complete our final impulsive leg. So that's what we can see at the daily. We want to get to the current price so that we can know what we are going to do. All right. So let's analyze this sort of price action from the 4-hour. You can see that we had a low here, then it was broken by this leg. So this becomes our new low. It's broken by this leg. This becomes our new low. So for a downtrend, the swing low or the low, let me call it a low, always the low ought to be broken. So in an uptrend, the high ought to be broken. Then you got a new low here. It got broken. A new low here. It got broken. Then a new low here. Where is the low? It got broken. Then we have this new low. So we are waiting for price to get there and break the low. But what is very, very, very important is when we get to 1 hour. 1 hour is the time frame I love the most because it gives me the current picture, what I'm supposed to do currently. Of course, we went to the weekly time frame, the daily time frame, and we knew we are selling. But it doesn't mean when you come to 1 hour or when you come to 15 minutes and you want to take a trade, you just go and sell. No, that's not how it works. You just have to know what price is doing currently. So using the 1 hour time frame, you use it to identify the current trend. That is very, very important so that you will know the action you are to take. So all the analysis we are doing after finding the main trend or the main direction using the higher time frame, that's the weekly, the daily, and if possible, the 4 hour. When you get to the 1 hour, you use it to identify the main trend. The 1 hour is used to identify the main trend. Now let's open the chart a little bit and see something. It's too long. Let me go to the 4 hour. We'll come back to the 1 hour. Let's go to the 4 hour. Let's see. This is this price action is an old friend here. We had a descending channel. A descending channel, and of course, price broke to the upwards. A descending channel. So that's what price did. Now, when you look at this swing high, that price sold from that end. All right. I have to know that swing high and tell myself that whenever price comes there, I will wait and see. If it will give me an entry, then I will look for confirmations and enter the trade. Now, when you look at before this descending channel, there was an impulse in the direction of the main trend. Then after that, there was a corrective pattern over here. So impulse, correction, then the next impulse. So we can say that, let me open it a little bit. This little block here, I can mark it. Yeah, it's called other blocks. You can use it to look for places where you can find confirmation for entry. So you tell yourself when price get to this level, I will watch out and see whether there is a probability that price will give me an entry. All right. So let's look at this as well. This is also in the form of an ascending channel. We have an ascending pattern here. Wow, this is very nice. It is looking good. So the next impulse will be to the downside, which is also in the direction of the main trend. So it means we are on track. But the question is, have you broken out? We don't know yet, because there is a possibility that price will come and test this high here before it comes. Or there is also another possibility that price will continue selling off from this point. So we have to be aware of all those scenarios. So let's go to the 1R to look at what price is currently doing at the main trend. Of course, as I said, when you look at the 1R, as price touches the block, we broke this low and price started printing a downtrend, because this is a lower high, a lower low, a lower high. Let me mark them. Where is a lower high here? Then we have a lower low, a lower high, a lower low, a lower high, a lower low. Then this was so the same lower high, because it was a double top, then lower low. All right. So price keeps on breaking the low, meaning that we are in a downtrend. So this was the low that was broken. Now, there is the next low that we have to break. To find the lows, I most of the time use the candle bodies, not the wicks. The low that has to be broken, I use the candle bodies, and the candle body must also break that low. So in identifying the current trend, we know that we are in a downtrend. Let me take all this off. So the current trend is saying that we are in a downtrend. Now, looking at where price is, we have to expect a sell-off to come down to break this low, or possibly price going from here, because there is a form of inverted head and shoulder pattern. Price could come to this level and reverse and come and test the level over here before coming down. So we are not dictating for price, but we are just analyzing to see the possibilities, and again trade what price prints. So we don't lead price, we just trade what price prints for us. So looking at this 1R, there is one thing we can do for those entries that you are finding. You have to know where you are going to enter your trades. We can see that here, as price goes to the zone, there was a block here. Price came and tested that one. Then price came and broke this low. There was also another block below here. Price came to, let me include this one, test that. So the block here where price started declining or falling, it is called the origin block. The origin block. And the block here that price broke, it's also called the breaker block. So when you backtest, you see how price moves. Of course, you want to make money in the market. So when you sit down and backtest, you will see how price moves. So here, the 1R, this was the block we had, and price came and tested. There was a news, price pushed up and tested again for the second time. So this impulsive leg broke this low. Then we had this low to be broken. And when the news came, it went in here, then came back and broke this low. Now we have this low, and we are waiting for the low to be broken as well. So for the current trend, it is bearish. It is bearish. So the next move, maybe we can also wait for price to come to this zone and see whether we can get confirmations for entry. So if the bearish trend is still to continue, then we expect that price should come to this zone, should at least trade to this zone and come to the downside. This is an analysis projection. Price may also decide to just come and break this, so you have to be ready. Price may decide to just come straight and break the low here. So there are two options. Either it will sell off from here or come to this level before it sells off. So in this tutorial, the current trend that we have is bearish. But when you compare that one to the 4-hour trend, the 4-hour trend, of course, the 4-hour is bullish because we're breaking to the highs. Yeah. And currently, this low is not broken yet. So that's why you have to look at what the current trend is. And the current trend, which is the 1-hour trend, is saying we are in a bearish trend. So if it says that we should continue the 4-hour trend, no problem. You just have to do it accordingly. So doing all this, after you know the current trend from 1 hour, you have to find an entry. So I come to the 15 minutes and possibly the 5 minutes to get confirmations and enter. So starting from the top where price started reversing, assuming I knew or was expecting price to reverse in that zone, what would I have expected? So price got to the zone. There was a low here, price impulsively broke the low. So what I would expect is that I'll pick this as my block here, this small one as my block, and expect price to come in, test. So looking at this, I may use a limit order here. Then I risk always for USD pairs, I risk 25 pips. So as we have here. And let's see whether the TP was smashed. Yeah, obviously. But most of the time I close my trades before TP. It is 1 to 5 risk reward. That's what I have stopped. But it doesn't mean I wait for 1 to 5. Now price came again. It corrected back to the breakup block. Now one thing I also used some sort of indicators, the EMA to help me with the entries, and I also have some TMA indicators over here. The EMA, the way I use it, if I'm looking for sales, then it means price should in some way be resisted by the EMA. So if I get price being resisted by the EMA, then I tell myself then this will be a clean entry point. So you can see here there was rejections over here, so it was an entry point. Then when you come to this place, price was acting as a resistance, so I can get an entry here with the EMA. Then other things, but again I also use it as a mid-range for price. If I'm looking for sales, I have to make sure that price is above the EMA, and if I'm looking for buys, price is below the EMA. So applying all those skills together, here price broke the low. Obviously, there has to be a retracement. So price retraced, it came to this level. Probably could have entered over here, could have entered at the block, or price came back again. There was an entry here because the EMA gave resistance to price. All right. Then when you come here again, price came to the EMA, and the EMA was also resistant price. You can see it went there, it came to break, and it came back again. So I could also pick this one as my entry zone. Then we have this. That's what I have. All right. Now, another thing that I do is that when price gets closer to this band, I also try to find an entry for a reversal. So, assuming all my entry confirmations are also met, I'll get an entry here with 25 pips stop loss, of course. Trade go to this level, but I will close it earlier than that. Of course, it was a reversal. Then, assuming you also caught this trade, that was a sell over here. Price go to the band. This is in the direction of the trend. And price also came to this zone. So that means we are going to buy. We are going to buy here. Now, all these zones we are dealing with, when you draw blocks, you see that they are in line. You are going to buy USD like this and bring it here. Buy. Of course, if I was in this trade, I would have TP'd around here, and that will give me about how many pips? 90 pips. Now I'm expecting price to come to the zone around this place before I can look for confirmations to sell. Of course, price may decide to come here. Then I look for confirmations to buy. Then we go up. Unless there is an impulsive move. For that one, I'm not going to trade reversals. But when price looks like it is correcting, that's where the reversal trading is very, very sweet. So I'm expecting price to go up before it comes down in the direction of the trend.